Hello, welcome to FountainFX on Friday the 20th of December 2013. We're going to have a quick look again at the US dollar yen and also the euro US dollar. The reason being is that you can actually learn something from the application of theory into practice. From a supply and demand theory, it would say because price reached this high of the 103.80, 103.90 area up here, and then turned and fell, and it fell all the way down to the 94 mark, so almost 1,000-point drop, and it dropped quite considerably and quite with a lot of momentum. Therefore, you should expect that when price gets back into this is an area where sell orders outstrip buy orders. Therefore, there's more people selling than buying, and that's what causes the price to fall. So when we get back into it, the first time we reach it, it should do the same thing. And as we can see, this was back in May, and this is now December. My personal view is that I don't have a crystal ball. I cannot see where banks and all the institutions and all the billions and billions of dollars of orders are being placed. In May time, it could be a lot of year ends for certain companies in different parts of the world, and therefore they're shifting money between Japan and America. I don't know. But the point is that that's 6-7 months away. Was it or more? Probably even more. I can't even count. 10 months. 7 months away. May, and we're now in December. So, what's that tell me? I can't guess to see whether or not all those sell orders have been taken off the market at that point in time. But not only that, market conditions have changed. If we can see, the actual dollar is gaining strength. The dollar's strong. If we go back to October, when all the negative news was coming out on the dollar, that happened here, where it went sideways and has pulled down. Since then, the dollar, since all the negative news in October came out, the dollar has now just gone on and a huge run of resurgence. It's run from the 97 all the way up to the 104. So in 2 months, the dollar has moved 700 points. So it just shows you that negative news is not always perceived as being negative by the market. But what's happening here, this is where I'm talking about currently in terms of what price is happening. We need to be looking at an ideal way in which we can take some profit from this. And what's actually happened is that yes, price came into this area of supply and then it fell, but it didn't fall very far before it pulled all the way back in. Now you could have managed your stop to make sure that you didn't lose out. But also you then had another chance to show that it definitely wasn't going to fall, because price turns and it falls back down here, but it doesn't break through this previous level that I've marked on here based on these two candles here as an area of resistance at the top. This was to identify this whole area of supply from previous activity. Price comes back down into here, it doesn't do anything, it goes back up again. That would basically tell me it's time to get out of this trade, either make a small loss, or if I've managed my stop from the original trade entry, to probably come out with zero loss, zero profit. But what's actually happened is that price has turned and it's pushed up higher, and we can see it's created a higher low, a higher low, and a higher low. So even though at one point this resistance was being honoured before it got broken here, there were higher lows. Price was pushing up, and what have we got here? We've got something called an ascending triangle, which is seen as a continuation pattern for an upward trend. So therefore, this is the one point where theory has actually proven itself in practice. So we were at a situation whereby price is pushed higher and we're up here. How can we take advantage of it? Well, we can go into a smaller time frame and see what opportunities there are there. So if we go into the 60-minute, we can look here and we can see, look, where price has been, where it came up and it touched this 103.90 as an area of resistance and fell back before it then rocketed straight through it. You can see it's literally turned in, and it's turned and used that as an area of support before it turns and continues to push up. So a buy order around about here would have been a good entry based on what's happened. We can see that obviously there have been some wicks that have gone through that, so we would have taken 10 points of heat, would have been down 10 points at that point, and also a few more points there. But overall, price has risen by 50 points. So that's a great opportunity to have taken the entry there. We can actually, there's a doji forming here at the moment. We have to wait until the 60-minute candlestick has formed before we know it's definitely a doji. It could just turn and go straight up again. So we need, we can sit and we can watch. We might take a perception which is, well, price could always come back down to this area again before it then pushes higher. So anyway, there's the opportunities. Price broke through. The quickest and nearest opportunity to buy was previous area of resistance, and that was honoured in that situation. So that's the opportunity, that's how you can use it. I'm going to quickly flick over to the US dollar, the Euro US dollar. And we can see on the Euro US dollar that unlike with the US dollar yen, the Euro US dollar is actually honouring the principles of supply and demand. We've got an area up here of supply, price touched it, formed a doji right in the middle, and literally turned and collapsed. It fell from 138 all the way down to 133. A nice move. And then since then it's been scrambling all the way back up into this area where it's done several touches, and in the process of creating a double top, or in fact a triple top up here, we then get another doji formation. As price pushes back up, doji forms, shows indecision, a nice sell order around about the 138, and it's been honoured as price pushes all the way back down again. So in that sense, that's confirmation of how theory works in practice. Price has now actually broken this trend line, which is bouncing off the higher lows that was happening up here. So as that's now come below there, that's another confirmation of sell. We've got the MACD crossover down here, and it's crossed below the zero line. That's another confirmation that it's in a downtrend, so sell. So that's really how you can use theory, turn it into practice, place a sell order, look for a target somewhere around about the 134. Yes, that'll be around about a 200-point gain. Nice little trade. Let's see what happens. You can then put a trend line on this, but if you want to place a sell order, go for it. And happy trading from FountainFX.